Welcome to the Daily Market Recap. Today is Thursday, July 23rd, 2026. Buckle up, market watchers, because the bears definitely grabbed the steering wheel today. The major indices took a noticeable nosedive post-close, with the Nasdaq taking the worst beating, dropping over 2%, while the S&P 500 fell more than 1%. What threw cold water on Wall Street's party? It was a nasty 1-2 punch. First, crude oil prices went parabolic, blasting past $90 a barrel amid escalating Middle East tensions. That instantly reignited inflation nightmares and sent bond yields spiking. Second, big tech earnings revealed jaw-dropping capital expenditure forecasts for AI infrastructure, making investors worry that massive spending will chew through profit margins real fast. Looking under the hood at sector performance, it was a sea of red for tech, but a huge win for commodities. Energy and materials were the undisputed rock stars of the day, riding high on that massive surge in crude oil. On the flip side, technology, communication services, and consumer discretionary got absolutely hammered. Big tech led the sell-off, pulling down software, semiconductors, and EV makers alike. Financials and industrials tried to put up a brave fight, but ultimately couldn't withstand the broader market drag as high yields squeezed risk appetite everywhere. With all this drama, the Greed and Fear Index officially slid down to 40, planting us firmly in fear territory. Just last week, traders were floating in comfy neutral territory, but today's spike in volatility in crude oil drove sentiment into defensive mode. A reading of 40 tells us investors are suddenly double-checking their life rafts and taking profits off the table. Our top story today: Wall Street is having a severe case of AI sticker shock. Heavyweight tech giants like Tesla and Alphabet released earnings reports, and while AI progress is undeniably impressive, the price tags are making investors sweat. Tesla dropped heavily after confirming 2026 remains a massive spending year for autonomous tech and robotics, while Alphabet raised its capital expenditure outlook up to $200 billion. Investors are asking when these astronomical bets will actually convert into bottom-line profits. Until big tech proves immediate payoff, Wall Street seems intent on punishing heavy spenders. Story number 2, crude oil had an explosive breakout. Brent and WTI crude shot straight past $90 a barrel as Middle East conflicts threaten shipping lanes and output. This energy spike sent shockwaves across markets because higher energy costs act as a stealth tax on consumers and spark fresh inflation fears. Even worse, it dampens hopes for central bank rate cuts anytime soon. Bond yields immediately leaped higher, dragging down equities across the board. Rounding out our top news, despite market turbulence, the American labor market is proving tough as nails. Fresh economic data shows job openings sitting strong at 7.6 million, easily outpacing 7.1 million unemployed workers. This strong labor data proves the core economy isn't collapsing into a recession, giving bulls something to cling to. However, a tight job market means sticky wage growth, giving central bankers reason to keep interest rates elevated. All right, team, let's dive into today's scoreboard to see who hit a home run and who got completely wiped out. Starting off with our top gainers, NVCR, IMAX, LMT, Hut led the pack today. Defense behemoth Lockheed Martin, ticker LMT, soared over 5% after crushing earnings estimates and raising its full-year outlook amid rising global defense demand. Movie giant IMAX flexed its muscles with killer box office numbers. Meanwhile, biotech player Novocure, ticker NVCR, made massive waves with positive clinical trial updates, and crypto miner Hut 8, ticker Hut, rallied thanks to expanding their AI data center operations. Now for the painful side, our top losers today were LBRT, MBLY, TSLA, QS. Electric vehicle powerhouse Tesla, ticker TSLA, got slammed down over 7% following a disappointing earnings miss and sky-high capital spending plans. Autonomous driving tech firm Mobileye, ticker MBLY, took a hit as EV slowdown fears spread. QuantumScape, ticker QS, tumbled as speculative growth stocks were dumped, and Liberty Energy, ticker LBRT, suffered a sharp drawdown despite higher oil prices due to margin compression concerns. Let's pull up the charts, starting with SPY. The S&P 500 ETF pulled back sharply today, testing vital short-term support right around $740. If bears push SPY below $740, the next major support sits down near $732. On the upside, resistance is heavily stacked at $755. SPY needs to reclaim $755 to regain its upward momentum. Moving over to the tech-heavy QQQ, the chart is looking decidedly cautious. QQQ broke down below key moving averages today, testing crucial support around $685. If $685 fails to hold, we could see a deeper correction towards $675. Resistance for QQQ is firm at 715, with a major technical pivot up at 725 that bulls must conquer to flip the trend back to green. Finally, small caps with IWM, the Russell 2000 ETF showed relative resilience compared to tech, but still ended in the red. Support for IWM is sitting strong at $290. As long as IWM stays above 290, small caps remain in a solid medium-term uptrend. Overhead resistance looms at $300, a psychological barrier small cap bulls haven't cracked just yet. Turning over to crypto, Bitcoin is feeling heat from macro risk-off sentiment. BTC slipped lower today, sliding to test short-term support near $65,000. Institutional ETF inflows have slowed compared to earlier weeks, adding to consolidation pressure. If BTC breaks below $65,000, expect a test of $63,000. However, resistance sits firm at $67,000. Breaking above $67,000 is key for the next rally towards $70,000. Ethereum is following a similar script, hovering around key support at $1,900 after pulling back from recent highs. Despite steady spot Ethereum ETF inflows, geopolitical worries are keeping a lid on price action. If ETH drops below $1,900, the next demand zone is at $1,750. On the bullish side, ETH needs a break above resistance at $2,100 to reignite momentum. For the broader altcoin market, it's a defensive, choppy picture. Today, most major altcoins are trading neutral to down, mirroring Bitcoin's cautious tone as trader sentiment shifts into fear mode, while selective AI-focused tokens and meme coins are seeing quick speculative bounces. Total market liquidity remains tight. Until Bitcoin stabilizes, altcoins are likely to stay in this consolidation pattern. To wrap things up, market sentiment heading into tomorrow is leaning cautious and defensive. Traders are juggling high oil prices, surging bond yields, and heavy tech spending. Looking ahead to tomorrow, keep your eyes glued to key inflation prints, geopolitical updates, and upcoming mega-cap earnings reports. These catalysts will determine whether bulls stage a comeback or if the pullback continues. If you found today's recap helpful, smash that like button, hit subscribe, and ring the bell so you never miss an update. Drop a comment below with your stock pick for tomorrow, and I'll see you in the next video.